In today's video, I'm gonna go over the importance of finding the right financial advisor and the stuff that you need to watch out for when you choose one, because after all, choosing a financial advisor is a lot like choosing a partner. Hey guys, this is Thomas. Better mindsets, better life. There are thousands of financial advisors in Canada. You might be asking, how do I know which one to choose? Sure, the advisor must have the technical skill and knowledge, that's a given. But what else you need to pay attention to when working with a financial advisor? Today, I will break it down to the most 4 commonly asked questions that you might have in mind. I will also give pointers and questions that you can ask when you first meet your financial advisor. And I promise you will not find these questions in other videos. Let's dive in. We live in a world today where so much information is readily available at your fingertips. That information overload is more of a problem than lack of information. You might think that Google and YouTube can give you all the information and advice you need to manage your money. But in reality, a lot of information on the internet can be inaccurate, incomplete, or given out with a malicious intent. If you don't know how to filter through all this information, you might end up hurting yourself. This is where using a financial advisor would be beneficial because they are highly regulated, meaning their information is current, reliable, and can be trusted. I like to think of wealth management a lot like losing weight or bodybuilding, in which you have to set goals and targets, come up with a meal plan and a workout plan, and finally, put in the work consistently. Likewise, in order to build wealth, you also have to set goals, come up with a saving and investment plan, and get the money to work for you consistently. However, some people can achieve great results by relying on nobody, where others can only achieve the same results by using a fitness coach or personal trainer. Why the difference? The answer to this lies in self-discipline. You have to ask yourself, are you disciplined enough that you can consistently save up month after month and stick to your plans and targets? If your answer is anything but a yes, then you should consider using a financial advisor. Who can qualify to be a financial advisor then? How are they regulated? Can I sue them if they give me the wrong advice? In Canada, financial advisor is a title that can refer to a wide range of professionals in different industries. It can be someone that works for a bank, an insurance company, or even a private wealth management firm. You want to work with the right one though, because it's kind of like seeing a specialist. They're all medical doctors, but if you have problems with your heart, you want to see a heart surgeon, not an eye doctor. So if you're looking for retirement planning, you don't want to be seeing a financial advisor that specializes just in the stock market. You need to figure out what you want to achieve with your financial goal first. In the recent year though, the financial advisor designation is much more regulated. Most of the individuals that claim themselves as financial advisors are required to have a license and are also regulated by a provincial regulator to provide advice on certain financial products. They must first pass multiple exams and then get registered with the provincial regulators. In addition, they are all required to have errors and omissions insurance because they can get sued for giving bad advice to their clients that results in financial loss. On top of that, most of the financial institutions in Canada are protected and regulated by the government. One such example is the Canadian Deposit Insurance Corporation. It basically insures Canadians' deposit held at Canadian financial institutions such as banks up to $100,000 in the event that a financial institution fails. For life insurance, Canadian policyholders are protected by Assurance if their life insurance company ever fails. For more information, please refer to the 2 links that I've attached below. 3. How much do financial advisors charge us? Financial advisors that work for free simply don't exist. If you come across one that claims he will work for you for free, walk away. In Canada, there are 2 pay structures that are most commonly used by financial advisors: fee-based or commission-based. To begin, let's take a look at the fee-based structure. Fee-based structure comes in different forms. One form is that, similar to lawyers and accountants, the financial advisors will start charging you the minute you start talking to them. Or they charge on a financial plan that they built for you and you're expected to carry out the plan all by yourself. Another form of this pay structure is to charge the client based on the amounts of assets they hold, and often this is a fixed percentage. So if you have $1 million assets, then each year you need to pay $10,000 to $20,000 to the advisor. The advantage of utilizing this pay structure is that it will remove the bias of recommending a certain financial product due to the fact that they don't get commission for it. On the flip side, the disadvantage of this pay structure is that the financial advisor may lack the motivation to follow up with the client and review the plan. They may also be less inclined to liquidate your investments, for instance, when you need the money to purchase a home, because their asset management fee would decrease. On the other hand, commission-based financial advisors get paid by the product they recommend. This might be advantageous to those clients who do not have a decent portfolio size, because this way they can still get proper financial advice without paying a hefty fee upfront. Too often, we heard that someone is recommending a product just for the commissions. While this can happen, many times the product actually does solve the client's problem. In this scenario, do you prefer the advisor to charge you or charge the banks? Personally, I'm less concerned how someone is paid and more concerned on why they are recommending a certain product and are they transparent about it. Keep in mind that you're always entitled to ask, and this brings us to the final question. If pay structure cannot help me determine who is the right financial advisor for me, what other factors can I consider? There are numerous questions we can ask, and I can guarantee you that these factors I'll be telling you, you will not find it in other videos. Let's start with the obvious. How long has the advisor been in the industry? No offense to newbies in the industry, but try to look for someone who's been in the business for more than just a few years. I usually recommend looking for someone with at least 5 years experience, as good financial advising takes years to master. Another question you may want to ask is, what is the advisor's expertise? Do they specialize in retirement planning, estate planning, tax saving, risk management, or investing? If retirement planning is what you're looking for, then an important consideration you should not overlook is the age difference between you and your advisor. Say, for example, if you're in your early 40s and he's in his late 50s, do you think he will still be around to advise you when you reach your retirement age? Yes, experience is important, but you also want to have someone who will be there throughout most of your life major milestones and when you make major financial decisions. How reputable is your financial advisor? Are they recommended by someone you know and trust? Do they have any published content such as books or videos such that you can learn more about them before you work with them? Finally, when the time comes and you are actually meeting with your advisor for the first time, do they listen to you or just try to push you with some products? Do you feel their passion? Are they being transparent with their fees, products, and plans? Do they give any expectation, such as how many times they offer to review your financial plan annually? When you have a question, what is their response time and how communicative and easily accessible are they? The bottom line is, choose the one that gives you the confidence and makes you feel comfortable to work with. I understand that was a lot of information, and the financial world is complicated. It is completely normal for someone to feel like they want to avoid the topic when it involves money. After all, our schools did not teach us how to deal with money. And yet, financial education is one of the most significant forms of education you can receive. Having the right financial advisor can truly save you a lot of headaches and make your life that much easier. I hope you find this video useful, and be sure to share it with someone that you think might be beneficial from any of this. You could potentially save them from a bad financial disaster. Oh, and don't forget to hit that subscribe button. Every week, I will share more on how money works and how you can work with money. This is Thomas, and I will see you guys next week.